Hello traders, I am Stephen Davis, Senior Market Strategist, RJO Futures. Friday morning, January 5th, here to talk to you about the grain markets. Okay, the corn market. We had export sales this week. It's a holiday week, so they're disappointing, but I really think the demand, export sales is the key here to the corn market going forward. Later this month, the NAFTA talks are going to continue in Ottawa, Canada, with our great president and Canada going over North American Free Trade Agreement, and it's so important. Mexico's been buying a lot of pork from us here in the last month, 30, 40, 50 days. They buy a lot of corn from us. It's just billions and billions and billions of agricultural trade across the borders here. So NAFTA really, really important later this month, and let's hope it continues for the U.S. farmer in our agricultural markets here. Our first chart of corn, you can see really not going anywhere. We're down here in very good support. The funds are record short corn positions. I think their positions are 445,000 contracts of corn. That's the biggest short position going into a new year in the history of these markets. So I'm thinking the market's a little too short here. A lot of grain analysts will tell you we get a crop report next week, January 12th. After this report, corn and soybeans are going to try to rally. So we'll see how that plays out. Okay, the soybean market. Our next chart, we're higher here today in soybeans. A lot of traders talking about higher S&P markets, pushing soybean markets higher. There is a relationship between all of these markets. So we'll see if soybeans don't get back to that $10 level. You can see that up above here on the charts that I have where all the resistance is. It's going to be 90 and low 100 degrees in Argentina in the next 6 to 10 days. So that could be something here going forward. This is going to stress the corn out first. And then next month in February is when all these soybeans pollinate in Brazil and Argentina. So if it's hot and dry next month, this could be a catalyst for a big rally in soybean. All right, what's holding the soybeans back here? Brazil's in very good shape. Argentina, there have been enough rains to keep this thing kind of sideways here. We're hearing chatter of China interest in U.S. soybeans. That's always the case when we have lower prices in soybean. A lot of peasants in China are becoming middle class, and hence their diets are coming more like ours. They want the protein diet that we have in Great USA. This story, this demand story for soybean continues. It's a good story. Okay, the wheat market here, you can see it's winter time, a lot of talk about cold temperatures and snow cover, and you can see wheat really not doing much here. It's more of a follower. What's holding wheat back is the big Russian production, grain production in the world there. It's warmer now in Russia too, so their ports are still open, still shipping wheat to that parts of the world. So we'll see about that. Okay, so the CRB index looks pretty good. The Bloomberg commodity index looks good. These agricultures are holding these commodity index back. Take a look at the Baltic Freight Index. That looks good. So world trade, real positive here. We'll see if these grain markets aren't a little too oversold and rally back next week. Everybody have an excellent weekend.